Hello there, my name is Ian.robinson from Mortgage Choice over in Thomas Street in Noosaville. I thought I would talk to you today about the confusing state of affairs that surround the banks and lenders lifting their interest rates in what is effectively a falling interest rate environment recently. How does it change things for borrowers, and what does it mean for people who are looking to get into the mortgage market or who are reviewing their current standing in relation to the recent events? Well, the latest round of interest rate rises has effectively changed forever the framework of mortgage lending in Australia to the extent that borrowers have not yet realised its full impact on them. The major banks have now clearly informed their customers that going forward they will move interest rates out of cycle with the RBA. In fact, not only will they be moving independent of the RBA, they will now also move independently of each other. Now this means that while the standard variable rates were for a whole generation on par with each other, they are unlikely to be so ever again. Increased funding costs, subdued credit growth, fierce competition for new customers has created this new normal in the world of retail banking. Prior to this latest round of interest rate hikes, there was only a 14 basis point divide between the standard variables for the majors, and now that's broken out to over 15 basis points, and that's just the beginning. To make matters even more confusing for mortgage holders, each bank is now adopting a different discounting matrix that treats all clients differently depending on how much equity they have, which in itself is also subject to ongoing and sporadic variation by the banks themselves as well. Now, this new normal for the banks will almost certainly leave existing and prospective mortgage holders even more confused than they ever were before. The intended consequence of this new banking normal is that mortgage holders will now, more than ever before, require the assistance of a professional mortgage broker when applying for a new loan or having their existing loan reviewed for its ongoing suitability for them. Now, the consequences of not going to a mortgage broker could be devastating and long-lasting if you indeed made the wrong choice in your mortgage. Things like shopping on rates alone is no longer the sole reason for choosing a bank. Payment terms and the way banks calculate fortnightly and weekly payments, the effects of offset accounts versus redraws, application and settlement fees, nuances around what property can be accepted and even what income can be accepted, and everything in between now plays a significant role in tailoring a loan to suit each individual's own needs. Now, as banks continue to be unpredictable with pricing their mortgage loans, it's important to use the services and support offered by professional brokers. Now, the way I see it, the service proposition for professional mortgage brokers has now taken on a whole new level of significance. My service offers a no-cost solution to finding the best home loan in the now ever-increasing maze of options out there. I'm available night or day to answer any of your questions and to have a chat about your existing or your future mortgages. I'm ready to help you, so please call me at any time on 5474 4100.